Hello and welcome to Money Matters. Just over a month ago, the collapse of the Terra US dollar stablecoin shook the already volatile crypto world, wiping out over $17 billion in crypto value. Since then, Bitcoin has sunk as low as $25,000, its lowest since July 2021. Is the Terra Luna failure a sign of things to come? Currently hovering at about $25,000, Bitcoin is valued at less than half its all-time high of $69,000 last November 2021. The added failure of the Terra US dollar stablecoin, with Luna, the coin linked to it and needed to create UST, contributed to the crash. Wiping out roughly $17 billion in value, many investors lost big in this experiment gone wrong. Prudential Global Investment Management, or PGIM, says in their crypto report that this is proof that cryptocurrency is a poor choice for long-term investors and sees no reason it should be part of institutional portfolios. But some crypto watchers think the failure was actually a net positive for the market.
Regulators around the world right now are looking at stablecoin and how to give a better governance framework and regulation around it. And then that's also what investors want. They want to invest in stablecoin, but understand very much what's backing this asset and how it's regulated and governed.
Max Song of Decarbon agrees, saying UST focused more on making profits from the stablecoin rather than using it. Owners could earn up to 20% by holding it.
Had there been more economy on UST, then this wouldn't have been the only thing that kept people's interest in UST. So I think further stablecoin projects should have learned from this, actually, to focus on getting additional adoption beyond just your own self-circulatory system.
Both Max and JD of OSL, Hong Kong's only regulated cryptocurrency exchange, agree that the Terra Luna failure is a one-off. And while the market is down, there is long-term viability for cryptocurrency. 29-year-old Alan Chizensky is one of the lucky investors who made money despite the crash.
I was able to not exactly time the market, but I picked a opportune moment to sell at our most recent all-time highs. So I actually did make a decent amount of profit on this market. That being said, now I'm kind of sitting here with cash waiting for a good buying opportunity to get back in.
Alan says he entered the market mid-2020, and having put in a total of $15,000, he took in $25,000 in profits last November, while maintaining a $20,000 stake in the market. He didn't buy Luna or UST. He stuck to the blue chips and a couple of altcoins.
The volatility, it's scary. I'd be lying to say that it's not scary. You see your money moving up and down extremely quickly. And I would probably say that investing in crypto, in my opinion, is a good idea. However, also, I would say invest like you're going to make a lot of money, but be prepared to lose what you're putting in. So you may not want to bet the entire house.
Max says the volatility of Bitcoin has actually declined over the last 10 years when there were 100% swings in single days. He says today's 30% swings are relatively mild in comparison. He does add that it's important for investors to really study the cryptos or coins they're thinking of putting money into, and not just taking advice from the person they meet at the pub.
The first thing for any investor is understand the nature of this market and understand the risk they are attached to it, right? It's a lot of education before you're actually even thinking about investing. And I think that's true for traditional finance.
Alan, who had been looking at the crypto market for some time before investing in it, says he really looked at the historical data of the coins he invested in.
I was playing a little bit safer by consolidating, into Bitcoin and Ethereum primarily. But also, it's a function of the fact that what I sold at the top of the market also was heavily skewed towards altcoins. So while we were going there and things started to look like, it might be a really, really good payday coming up, I wasn't necessarily guessing that was the top of the market. I was more just looking at historical data and saying, I can't be unhappy with this current profit gain that I have.
With a day job as a cybersecurity specialist, Alan says he's long crypto, so he's willing to weather the volatility. The underlying technology is what strengthens his belief in the asset.
I have a look at this as well from living on kind of the edge of what's coming up in the cybersecurity world and thinking to myself, this could really change the way that cyber works as well, at least the underpinning technology of blockchain. So I'm long from a financial perspective, and the technology driving it, I'm extremely long. I see that as really transformational for our society.
And it seems institutional investors are as well. OSL, which services only professional and institutional investors, recorded a 73% year-on-year increase in overall platform trading volumes from 2020 to 2021. JD admits Bitcoin is becoming more closely correlated with traditional assets, but says adding digital assets creates a better diversified portfolio.
We see no trend of people backing and losing interest in asset class. Actually, the opposite. We're seeing a lot more regulator across the world welcoming, embracing trading platform and operator to offer crypto and digital asset access in a much stronger and safer manner. And so with that, investors are actually embracing this asset class, and they feel a lot more comfortable now investing. And I think there is no trend of that changing in the foreseeable future.
He adds that the entry of traditional big-name brands into the metaverse, such as Nike, Walmart, and Disney, to name a few, is also increasing adoption of digital assets.
So you need crypto and digital assets to actually interact with the metaverse, and so that definitely, create some kind of synergy between crypto and digital assets.
For both Max and JD, the current downward trend is a correction.
My view is that at the moment we are having a phase of stabilization after a large correction. And then, depending how the global economy reacts to the latest decision made by the Fed and tackling inflation, we'll see, how risky asset will react, and there'll be potentially, I think, possibly another correction in short term. And again, that's going to be very much in tandem with, I think, the reaction of the traditional finance markets.
Alan, who invests in equities, says his portfolio has undergone a massive change in the last 10 months.
My crypto portfolio has trounced my recent stock picking portfolio because of the exponential gains. In terms of myself being an active investor, I would say that I'm probably now, 2/3 crypto, 1/3 stock.
Alan says he's planning to get back into the market within the month.